Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1550A, and today's date is April 21st, 2018, and the title of the episode is, The Fed Just Did It Again, Recession is Right Around the Corner. Now, before I get started, I just want to make an announcement. I uploaded two interviews. One was on Thursday night. The other one is Saturday morning. The first one I interviewed was with Jordan Sather, and the other one is with Phil Sloan. They're both on the X22 Report Spotlight YouTube channel. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It'll bring you right to the interview, or come over to the X22Report.com or newssentinel.com. Scroll down a little bit, look over to your right-hand side. You can play the video right on the site, or go to Steemit, that's steemit.com/@X22Report, and you can play the interviews right on Steemit. Let's get into the economic collapse financial news. Now, we understand that the central banks, they are very nervous about cryptocurrency. We know the IMF is out there saying we need regulation. We know that they've been bringing the price down of Bitcoin by dumping like 50 million, 100 million worth of cryptocurrency. And they're trying to get people very, very nervous about investing in cryptocurrency. And the reason why there's a huge focus on cryptocurrencies is because they realize if the general public wakes up and they realize the power of cryptocurrency, it's game over for the central bank, because what you can do with this technology is basically move into every single part of the banking industry and remove the banks, remove the central bank, because really, if you really think about it, centralization, that's obsolete. They're done for. The banking system as we know it today is pretty much done for. And the way everything works is about to change. It's almost like when the internet was first evolving, when there were stores coming online, you were able to do your banking online. And because of the internet, you had smartphones. And then think about how smartphones basically took it to the next level. The same thing is happening with cryptocurrencies right now. Yes, we had the blockchain 1.0, the blockchain now 2.0, and this will continue to evolve. And before you know it, it will overtake the banking system. This is why they are so nervous about the crypto market. And this is why they've been trying to make it seem like you don't want to have it. And once that great awakening starts to happen, it's basically game over for the central bankers. And if you want to know more about cryptocurrencies and you're just new to it, just like the internet, but the internet was first evolving, and we had AOL, dial-up, people were getting into it. A lot of people didn't understand, what it was, why we need it, what could it do, what technology would this push in the future. People didn't realize how big this was going to get. The same thing's happening with cryptocurrency. It's very, very early on right now. It's in the early stages, and people don't realize how much the blockchain system can do. Now, the central bankers, they realize what this is capable of, and this is why they're shaking in their boots. And it doesn't mean that the central bankers, they just, have given up. They're going to continually try to make it look like nobody should be using cryptocurrencies at all. And you're going to see these ups and downs and things like that because, again, they have the ability to use free money to buy up Bitcoin and to drop the price. And this is why you need to know how to maneuver in and out of it. And if you want to learn about that, you can just go to the link X22reportschool.com. I also have a banner on the X22report.com site, and there's two parts to it. There's a school and a trading room, and there's two traders in there, Crypto Z, Crypto Cowboy, and many others. I'm in there learning. You watch them and you watch how they trade. They pick different cryptocurrencies and they tell you, this is why we think this one's going to go up. This is why you need to get out of this. And you watch them do it, and they show you what they are doing. And you can just follow along. It's an entertainment room where you're watching them make moves, and you can do what they're doing and make a profit. A lot of people in there are making profits. And a lot of people are worried about, what do I do with the cryptocurrency? What happens if I want to cash out? Do I have to go into dollars? Well, they have the ability to take your cryptocurrency and you can basically cash out of it, not into dollars, but into physical gold, and they will actually deliver it to you. So you do have the opportunity to cash out into gold instead of dollars. And all you need to do is go over to X22reportschool.com. You can learn all about it. You can, ask questions and things like that. Again, I am in the trading room. I am listening every day to what goes on, what trades they are making. And again, this is about our freedom. This is about separating ourselves from the central bankers, waking more people up to understand and realize that there is something else out there. Instead of being enslaved to the central banks, instead of using the Federal Reserve note, we need to wake a lot more people up to move away from the central banking system. And I said this before, Trump does have Andrew Jackson hanging on his wall in the White House. And I believe one of his last moves out of all of this that he is doing right now is to basically move away from the central banking system. And I think he's working with China and Russia to do this, just like he's been working with Russia and China in North Korea, in Syria and Iran. I believe he's going to make this move at the very end when everything starts to fall apart. Now, here in the United States, we are seeing that everything is starting to break apart. And I'm talking about the economy right now. And Morgan Stanley, they warned that the credit cycle is on its last legs. And they're saying that, in their view, a key driver is simply that global liquidity conditions are tightening and markets are coming to a realization that the process will be rocky. Rising funding stresses, weaker flows, weaker trading liquidity, higher volatility. This is arguably what quantitative tightening feels like. And in their view, these dynamics will continue to pressure credit spreads over the course of the year. Now, Morgan Stanley concluded that the evidence is mounting that spreads have hit cycle tights. In other words, that bigger fundamental challenges in credit are 6 to 12 months away, not 2 to 3 years down the road. So they're headed towards us much, much quicker than anyone thinks. Now, Bank of America Chief Investment Strategist Michael Hartnett is also pointing out that the market is late, very late cycle. Not only that, but based on annualized asset returns, the market now is most similar to what happened, just before the financial crisis of 2008. And when we look at the U.S. yield curve, guess what? It's inverted. And every time we've seen this, something really, really bad happens. Now, what's very interesting, if we go back in time, Bernanke was out there in the year of 2008 saying that we're not predicting a recession anytime soon. Everything looks good. We have everything contained. And we're starting to see the same exact message where they're saying, listen, don't worry. We're not headed into a recession. Everything is fine. Now, of course, this is what they say when we're entering a recession or we're already in a recession. And they said not to worry because growth prospects look pretty strong, which is why the Fed is raising short-term interest rates. And they are out there saying that they are raising the rates so they can flatten the yield curve. In addition, they argued the curve will likely steepen as the U.S. government runs a bigger deficit and issues more debt, they said. The Fed policymakers reason that a bigger supply of debt should put downward pressure on the Treasury prices and deliver a corresponding lift to yields. So they want more debt, and they're saying that this will fix the problem. But we need to go back to what we just talked about with Morgan Stanley and Bank of America, where they're seeing the credit cycle is on its last legs. Now, as we add more debt, there are more and more countries out there saying, listen, you can't sustain this. This is not going to be good. We don't trust the dollar anymore. And we're actually seeing that. We can't trust the treasury bonds right now. That's why there are countries that are dumping the treasuries or put a halt to purchasing treasury bonds. So when we start to look at this, we say, what's going on here? And we see a lot of countries out there saying, you know something? We would like our gold back. And the only reason they're asking for their gold back is because they don't trust the dollar, and eventually they're going to ditch the dollar and move to another currency. And we already see Venezuela, Germany, Austria, Netherlands, and other countries asking for their gold back. And now Turkey has also announced that it has decided to repatriate all of its gold stored in the U.S. Federal Reserve, and they want it delivered to the Istanbul Stock Exchange. And again, Erdogan is out there saying these are the reasons we want our gold back. They said they have taken a tough stance against the U.S. currency, criticized dollar loans and saying that the international loans should be given in gold instead. Erdogan said, "Why do we make all loans in dollars? Let's use another currency." He went on to say, "I suggest that loans should be made based on gold. With the dollar, the world is always under exchange rate pressure. We should have states and nations from this exchange rate pressure. Gold has never been a tool of oppression throughout history." So countries are already out there saying, let's move away from the dollar. We know China's doing it. We know Venezuela's doing it. We know Russia is doing it. Turkey is looking to do it. Iran is doing it. Syria is doing it. There are many other countries that are moving towards the East and away from the West because they realize that the full faith credit of the dollar is not there anymore because the amount of debt and what we're seeing today, it's completely falling apart. And eventually what's going to happen is the United States will end up defaulting because the amount of debt that is being created today is far above the amount of tax receipts that is coming into the government to even pay for the interest. And eventually what's going to happen as you add another trillion and another trillion, guess what? People aren't getting jobs. They're not getting higher paying jobs. They're getting lower paying jobs. Wages are falling. Jobs are either part-time or low paying jobs, which means less tax receipts come into the government. And you know the wealthy, they know how to get around all the tax laws where they pay no taxes whatsoever. So what is happening here is the beginning stages, well, it's been happening, but it's continuing on now, where countries are slowly moving away from the dollar. They want their gold back. They're using other currencies to make deals, to have trade. And eventually what's going to happen, they will eventually move away from the dollar. And eventually what's going to happen is the dollar is going to collapse. Countries are going to sell their treasury bonds, or they're not going to purchase any more treasury bonds. The whole thing is going to implode, and those dollars are going to float right back to the United States because nobody needs to hold them in reserve, and we're going to see inflation. It will start out slowly. Yes, prices will increase, and then we'll start seeing hyperinflation. And then what will happen? The Fed will try to raise rates to counter all of this, and this is a complete disaster in the making because we've seen this before. What happened during 2008? They raised the rates, and the economy was kind of strong back then. Today, it's built on an illusion. They raised the rates just a little bit. They didn't even have to raise it anywhere near they did what they did in 2008. They just have to raise it a little bit, and everything is going to fall apart. And they know this. This is why they're taking very, very tiny baby steps, because they don't want to be responsible for what is going to happen when this whole entire system completely implodes. And this is why you need to be ready and prepared. And I think what's happening is Trump's policies are pushing the Fed in a certain direction. And I think basically he wants to gain the narrative to show that it was the central banking establishment's fault of why all of this happened, and then he can start an investigation into the central bank, because we know under the covers they have been dealing in some covert operations. Again, they're not working for the people of the US or around the world, and once the covers are, pulled back, we're going to see so much in there, what they've been doing. And I think this is why they're going to be pushing that audit bill, and eventually that audit bill will go through. The president will sign it, and this is when everyone is going to see what the central banking system actually has been doing all this time and what they've been doing to the country. And people are going to be shocked. And once he rallies the people to get rid of the central bank, well, guess what? It will be game over for the central bank, because this will spread around the world. And I believe this is the push that he is moving towards right now. But again, we have to take baby steps, because intertwined in all this is the deep state, which uses the central bank. And first you need to go after the deep state. You need to basically bring them down, then go after the central bank, and then cut everything off. And this is what is happening right now. This is why you need to be ready and prepared, because we are headed towards a major transition. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.